Friends, in this video for ithought Advisor, I am going to talk to you on the topic investing beyond the obvious. When the markets take a sharp turn, when sentiment changes significantly, either for the better or for the worse, when it looks very difficult to make a decision, that is when the quality of an advisor is really going to matter. It's when everybody freezes in activity and does not want to make a decision, the advisor who steps up and gets ready to make a decision always makes a big difference. If he is able to make the difference with conviction and with clarity, then you are able to benefit significantly from that advice. Advice given in normal times, when everything looks hunky-dory, is really not going to make a big difference. Which is why most of these people who tell you that do index investing, you don't need any advice, always overlook the prospect of an advisor making a significant difference exactly when it matters the most. To them, it's always business as usual and they think that it's an asset gathering game. It's actually not. For an advisor, it's a game of wits where he holds his own, makes decisions for which he has prepared for a very long period, responds to crisis and turns it into an opportunity and helps the investor do that for himself as well. So it's not business as usual, it's not something which you do in normal times that really matters. It's what you do when it matters the most. And in that sense, it's very important for an advisor to think beyond the obvious and come up with investment decisions. It's not easy for an investor to even evaluate that advice. I have seen many times investors asking why you are not doing the obvious, because the markets, the media, social media, everything feeds investors with what is obvious. Because when you receive that information from them, they want you to be immediately convinced on the merits of what they say, and they will say it only when you are most likely to be immediately convinced. So nobody is going to come and tell you what is very difficult to convince you, and that is what a good advisor should do with you. Now, when he does it, what is it that you need to do? Often we think a lot about what the advisor should do for us. Rarely do we see investors who also understand what they need to do. Advice can be given, it's like a doctor's prescription, but acting on that advice, turning it into something that will solve a problem and actually create an opportunity is the investor's responsibility. You need to follow the prescription. You need to use the prescription to make a meaningful difference to your investment. And for that, you need to evaluate, internalize and act on the advice. If you do that, then you would be able to act beyond what is obvious. During the recent months, we saw a very peculiar situation. We saw that global commodity companies were being sold indiscriminately. So we thought that it's a good idea to go and buy a global mining fund. Now, when we took this idea to investors, it was not something they were hearing anywhere. It was not on the radar of the investment world or the media in India. So nobody was really looking at a global fund in which they could buy mining companies worldwide. It didn't make sense to them at that point in time. But to us, it made a lot of sense because valuation was in favor. Businesses had significantly lowered their leverage and they didn't have to really invest too much money to grow. All they needed was demand to come back. Now, this was a very classic scenario to bet on a situation because you could benefit if you are right, and that benefit would be significant. Subsequently, we saw the Ukraine situation open up and we saw the problems rise, we saw commodity prices spike and these stocks returned significantly. At that point, when we thought about it as good advice for our investors, we were looking at a position somewhere around 5% of the portfolio. it was meant to be like an optionality to the whole portfolio. The idea was, if you have a 5% position which is an optionality trade in your portfolio, if you are right, that optionality trade can give you what you really want as beta over whatever benchmark you want to use, and that is exactly what happened, and that 5% position grew to 8%, so you got a 3% swing in that within a span of 6 months. Now this is exactly what advisors can do, should do, and must always be focused upon for their clients, because otherwise I see that the advice making a big difference to the investor is not going to be easy, because you are also going to have managers who are going to do things right and wrong, which will sometimes slip and which will make returns lower than what investors would aspire for. As a philosophy, our house view is that we should always be on the lookout for such opportunities for our clients in the advisory space, and we should hopefully make our clients participate in every one of them. There have been some situations where the clients did not participate, they froze in action, but it's our belief that we can't give up. We should always put that advice before them and make them realize what it means to their overall investment outcomes. If investors and advisors come on the same page, then you are going to beat whatever benchmark you aspire to beat by a wide margin. All you need to do is believe in each other, believe in the ideas, and act well in time. Thank you for watching this video.